What is up, YouTube? Welcome back to my first video back on the YouTube grind. So today we're going to go over my 2026 model. We're going to break it down, we're going to analyze it, and then we're going to go on the actual charts. I'm literally going to show y'all the past week. So I'm recording this on Saturday, so I'm going to show you last week's, well, I guess this week's, I don't know. I'm going to show you that this model actually works, and it's not just complete hindsight. I'm not going to cherry pick, a most random week back in like 2015, right? I'm literally going to show you the most current price action that we have. Obviously not most current because it's the weekend, but the latest price action that we could get, so that you can see that this actually works. So let's just get into it. This model specifically is designed for prop firms, but you can trade this on a live account. It's just that risk management is a little bit different on a live account. So with the things I'm talking about right now, especially on the risk management side, it is going to be more about prop firms rather than trading on a live account. But this model can be traded on a live account. Nothing wrong with that. So let's just get into it. Credits, right? I did not come up with a lot of these concepts, right? All of these concepts that I use: Power 3, chain and state deliveries, weekly profiles, I guess you can call it. Personally, I did not come up with all that. First of all, Inner Circle Trader, Michael J. Hudson, he created all the smart money concepts that you see on the internet for value gaps, breakers, order blocks, market maker models, Power of 3. All of those concepts come from him. That's where I learned it at first, and I consider the author of a lot of these concepts. The reason why I say that is because a lot of these concepts were not widely taught, or just not in books or YouTube in general before he came onto the scene. So I consider him the author for a lot of these concepts that I use in my model. And then Gaddy Trades on YouTube. He's someone I know really well, and he has taught me Power 3 mostly. So most of my Power 3 knowledge comes from him, and my model is derived from his own model. So yeah, big shout out to those two. And it's actually funny because today is ICT's birthday today. It's actually pretty funny. Today is ICT's birthday. He's turning 50 today. So wish him a happy birthday. Maybe he'll see this. I don't know. He'll see this one day, but yeah. So let's go into concepts I use every single day. So concepts I use every single day: Sunday, 6 p.m. EST weekly opening price. That is the first price action, the first print of price for the new week, right? After the weekend, your first print and price is 6 p.m. and that's where you get your new week opening gap. New week opening gap can be a strong draw on liquidity, can be a strong level. Personally, I don't use it, but it's something that I can look at, and if it supports my trade idea, then cool. But personally, not something I use every single day, but it can be something I look at. Midnight, 12 a.m. EST opening price. That is the daily open for every single other day, right? So Sunday is the first open, but then, for example, if I'm trading Tuesday, right? Tuesday's open, I consider it at 12 a.m. EST because that's actually when Tuesday starts, right? The 6 p.m. open, just for Sunday for me, and I'm just looking for, on Sunday's opening price, I'm just looking at a manipulation above or below and seeing which day creates low or high could be a high or low week. But every single other day, right, it's going to be 12 a.m. EST, and I'll get more into that later. 9:30 a.m. EST opening price, that is your regular trading hours open. So that's when all the stocks, the New York Stock Exchange, all of that comes online, and we have a large injection of volatility because if you trade in Q or ES, their stock equivalents are QQQ and SPY, and all of the stocks inside of the NASDAQ and the S&P start trading at 9:30. So see a lot of volatility at 9:30, and then 10:30 is 30-minute continuations of 9:30, right? So 9:30 really works really well with 30-minute intervals because 9:30 starts at a 30-minute interval, right? So every 30 minutes can be a nice scalp, and they line up with the macros decently well. So other key concepts that I use are previous day high, previous day low, except for Monday. I will explain that because for me, I keep my range of focus inside the weekly candle. So I see every single week as a new reset because new things can happen in the week. Trump can tweet. We have news, right? We have news, and news could be a shift in market sentiment, right? So every single week, I'm changing bias. My bias for the last week does not shift over to the new week. I always look for a new bias every single week. Now, you don't have to do that, but that's how I like to do it, how I like to be, right? So remember, putting together a model is a very personal approach, right? It should be personal, right? You should never take the same trades as exactly as someone else. You can take similar trades, right? And you can base your model off of them. But At the end of the day, it's you sitting down on the seat. It's you who's clicking the button. It's you who's putting money on the line, right? And yeah, so remember, this is a you journey, right? You don't give a fuck about what anyone else says, right? It's just you. You trade price how you want to see it, and if you don't see it very clearly, then obviously you can ask for help. But at the end of the day, it's how you see price. So of course, I don't use that much stuff, right? I don't use fair value gaps, no breakers, no mitigation blocks, all that stuff, right? For me, very simple. I keep it very, very simple, because a simple system executes in the markets. A complicated system, you trip over your own feet, then you overthink, right? Oh, I had a breaker block, but I didn't have SMT. Maybe that's why the trade was invalid. But instead, if I just like, oh, my order block failed, oh, whatever, right? Oh, my order block failed. Okay, that was just a losing trade. Next, on to the next one, right? But if you have 1,000 things and you're like, oh, I didn't have SMT. Oh, I didn't have like, I don't know, like a tap into a breaker. Oh, I didn't have like, 50 for value got 50% tap. It doesn't really matter, right? Well, it does matter, but at the end of the day, you're going to be tripping yourself over your feet, because you're always asking yourself, oh, my model didn't fully present. Maybe that's why it didn't work, right? So having a couple simple things are like, okay, I see my model. I know I have back tested it. I know that it works. If it fails, oh well, just a losing trade. It'll win a statistic, right? So, of course, if you don't know anything about ICT, should not be watching this video. You should be learning yourself on the basics of ICT. So you should watch Yadi's Trades, YT, ICT Education Series. You can just search up on YouTube. They're like sub 15 minutes, give or take. It's not very long. And you can learn all of the ICT concepts, most of the foundational ICT concepts, in a week or so. And then ICT's 2022 and 2024 mentorship. And so those ones are a little bit longer, right? The 2022 is not as bad. 24 is bad, because ICT live streamed, I think, most of it. So he goes off on a lot, but there are ICT videos, ICT channels that condense it to where it's like a no rant series. So those ones could work as well. But personally, those are the two that I really like watching, right? The mentorships are really designed to get you from A to B, right? Unprofitable, don't know anything about trading, to a good baseline knowledgeable trader, right? While the 2016 core content is more of a library, right? It shows you a bunch of different concepts, but it doesn't tell you how to put a lot of those together, right? It could teach you about market structure shift, could teach you about breaker blocks, could teach you about order blocks, but it doesn't give you a model, right? Mentorships, like the 2022 model, teaches you about market structure shifts, fair value gaps, liquidity sweeps, right? But then it gives you a model to work off of, right? So, and it shows you how you can build off of that. The core content doesn't. The core content is like, oh, here's all the information, put that together how you will, right? So if you want a easy step-by-step, A to B, watch the mentorships. If you're a little bit more advanced, you want to learn more about ICT, you can go on the 2016 core. So parts of my model, very, very simple. Only 4 parts, really 3 parts, but it's 4. Daily bias, intraday bias, entries, risk management, which is the most important. So my model's main goal is to understand when both the lower time frame and higher time frame are likely to expand together. And how you find lower time frame expansions is when the higher time frame is ready to expand, and then you align it with the lower time frames, right? So in this case, I'm aligning multiple candles, right? So the weekly candle is ready to make its body. The daily candle is ready to make its body, which is the expansion of price, right? The 9:30 regular trading hours 4-hour candle is ready to expand, right? You want to align those candles together with power of 3. Alignment of power of 3 is how you get high probability expansions, right? So price will only expand if, 1, the higher time frame is positioned to expand. That's your daily bias. I'll explain how the power of 3 comes into that. Lower time frames align with the higher time frame, intraday bias, and when time allows it to do so. 30 minutes / 9:30 power of 3 entries. So that's all the gapping. Now we can go into diagrams. So first things first, daily bias. So what is daily bias? Daily bias is the idea of which we, the traders, think that prices will only go over the next couple of days, right? Over the week, right? So this is more long term, right? You're not going to see it all in one day, right? You could think that, like, oh, the week's going to form bullish, right? But it's on a Tuesday. Obviously, you're not going to see all of that inside of the Tuesday, but you can wait multiple days, Wednesday, Thursday, Friday, all expand higher, right? That's your daily bias. So how do you determine daily bias is what the weekly power of 3, which is the formation of the higher time frame weekly candle. Every single higher time frame candle has the same principle, where we're trying to catch when it's high or low is created, and then we're trying to trade the expansion away from it. Reminder, we're not trying to catch the low, okay? We're not trying to top tick or bottom tick the weekly candle, okay? You're trying to react to price, right? Don't try to predict, react, right? React to the signatures, which I will show you on when the weekly candle is willing to expand, right? When it's made its low and it's willing to expand, right? I'm speaking bullishly. I'll probably speak mostly bullishly throughout this video, but it's the opposite for bearishness. So all we're trying to do, react when we think that a low has been put in. That could be the weekly low, and we're trying to trade that expansion away from it, right? Because once the candle makes it low, it will have expansion away from it. That's just how candlestick prints. That is the nature of candlesticks. Doesn't matter what asset you trade: gold, corn, NASDAQ, S&P, Dow Jones, the Russell. Doesn't like you can trade anything. That's how candlesticks print, right? So each week will form differently, right? Not every single week's going to look the same, but the thing that we look for are stay the same. The only thing that changes is when it forms, right? We're always going to be looking for a lower high of week. The only thing that's going to change is obviously what day it forms on, right? So this is the schematic. It is very simple. So obviously this can be any single other day. It's just in this case, it's a Tuesday low week, which is ideal, right? So ideally you want to have on a bullish week, you want to have the lower high form on a Monday or Tuesday, and then the opposing high on Thursday and Friday. And we'll talk about how to trade counter trend or when the range has been set, kind of, right? So daily bias, right? So all we're looking for is a previous day low sweep, and the only exception to this is Monday, right? So if let's just pretend this Tuesday candle was Monday, if Monday just opens lower, creates this low and gives us the change in say delivery, which is what our signature is. So once we see this below the weekly opening price, right, and create this low, right, when the weekly trades lower, creates this CISD, right, and expands higher, that's how we know when the price is willing and when the weekly candle is likely to make its low. And I'll show you examples of this. So previous day's low, right? And if it's Monday, right, you don't have to need this. You don't need a previous day low. You don't need Friday sweep, right? You can just get the 1 hour change in state, right? So I will show you how this works in a real life chart example because it's kind of hard to understand it with a picture, right? So any other day though, you need to see a previous day low or high sweep, right? In this case, it's a low, so we trade lower, right? Take out previous day's low, 1 hour change in state. We can think that okay, this low has been put in, right? We can be bullish for the rest of the week. So unless we see some other reactions, which we will talk about, right? So second thing, daily bias and validation. Validation of protected lower high. So in this case, it's this, right? This example, right? Where we have Tuesday as a possible low of week, right? However, Wednesday does not respect that low, right? As you can see, Wednesday trades back into that low and creates that new low, right? So obviously this could just mean that, price needs a little more time to get that low or high of week that we like. Or it can mean that your idea is just invalid, right? So for example, if Monday puts in a high here, right? If Monday puts in a high, right? If Monday opens high, gives us a bearish change in state delivery, right? And we trade lower, but then Tuesday forms a protected high or low. Oh, in this case, a low. What am I thinking? When Tuesday creates that low, it's either are we going to expand Monday, are we going to expand higher, or are we going to expand lower, right? And obviously us taking this will be invalidation of the higher prices narrative, right? So obviously this is very simple. If you take out the low is no longer valid and we have to reassess, right? So this is the last thing is daily bias intra-week counter. So this is more risky. So ideally the highest probability days are when we have one-sided expansion, when we have a one-sided narrative, right? However, price is not going to expand forever, right? Usually it's around 3 days. If you observe price, usually when we have 3 large expansionary days, you either have some sort of retracement day or some sort of consolidation day, or it could be like 1 or 2 days. If they're really, really big, you can see price kind of, cap off that range, right? Price can only expand so much. So in this case, you can trade price back inside of the range. So in this case, you're trading this wick of up here. We're trading this wick, right? So obviously it's not the highest probability setup, but I'm personally a scalper, so I'm perfectly fine trading, counter trend, right? I'm perfectly fine with that, because if I'm scalping, realistically a higher time frame retracement is a lower time frame reversal. So I'm perfectly fine with trading counter trend. If you're not comfortable with it, then obviously you don't have to. just focus on the higher probability days, right? Focus on this Wednesday, right? When we have a low form on Tuesday, right? The same thing that we've been talking about. This Wednesday, very high probability. Thursday, also pretty high probability until after we close, right? We sweep out previous day high, right? And this is the opposing move, right? From this low, we have now an opposing high opposing this low, right? So, and then this is where we can see us trying to trade back into the range, right? So obviously it's not as high probability at this point. You either have to scalp ideas, or you could rely on the daily power of 3 and just fade the weekly. But for simplicity's sake, I always trade in the direction of the most recent high or low that's formed. So if this forms here, I will be looking for shorts, and since I'm scalping, I should be fine with those counter trend trades, right? And obviously this could lead into a full reversal, right? So price could trade here if this happened, maybe like Friday was larger, right? This could lead into a full reversal, but I just expect for the time being that price is probably just going to retrace, right? We're probably done with the expansion. We're probably going to create that wick of the higher time frame candle, right? And obviously there's the invalidation up here, right? If this high gets taken, then obviously the weekly expansion is not done, right? So yeah, so next thing's next, intraday bias. Intraday bias is only considered when we have a strong daily bias. So if we don't have a clear daily bias, right, if there's no low or high that you think that has that change in day delivery above or below the weekly open, a high or low that you don't think is going to be a high or low week, you don't trade, right? You sit on your hands, you let a couple days pass, right? I guarantee you, if you ask any trader, right, any great trader knows which days to not trade on, right? There's a reason why a lot of good traders, right, they only trade a couple trades a day, right? And even me, I used to trade every single day of the week. Now I rarely trade Mondays, and I'm taking less trades, right? So intraday bias, right, it should only be considered when we have a strong daily bias. As explained above, we need a clear daily and intraday bias for a trade, right? If you have a clear daily bias but no intraday bias, there's no trades, right? You need to understand when trading conditions are good, right? And that's when the higher time frame candles, the weekly and in this case the daily candle, are willing to expand, right? If the weekly candle is willing to expand but the daily isn't, then you know where it's going to go, but in the time frame that you're trading, the price is not going to go there, right? So that's why you need an intraday bias as well. So there's two ways you can get intraday bias. Usually it's this one, sometimes it's this one, and I'll kind of explain why. So the first one is daily power of 3, where you have manipulation below 12 a.m. So that's the 12 a.m. EST midnight opening price I was talking about. We trade lower and we get 15-minute change in state delivery, right? Validation once again goes below the low and we expand higher. Now this 930 is slightly different. 930 is if we don't have a clear daily power of 3. And the reason why I'm so cool with using 930 is because the bulk of the daily range is usually formed during New York session, right? New York session has the most volatility. Price is most likely going to move the most in New York, right? Gun to my head, I'm going to pick New York for the most movement, right? Because we have all the news coming out at 8:30, right? And then you have stock exchange open, and then sometimes you have 10 a.m. news, right? So if I'm not clear on the daily power 3, I'll use 930, right? I'll wait for 930 to create its wick, right? So it's the 1 minute change in state delivery, 1 minute opposing run. That's that 930 Judas that ICT talks about. And a lot of people are focusing on catching it. If you're not comfortable in the given direction, right, then you can just let it play out. You can let it play out, see which side the market wants to manipulate, and wait for the continuation, right? And for me, I'm actually letting that first initial 30 minutes play out and then trading 10 a.m. because I trade 30-minute power 3s for my continuations. So there's a lot of time for that manipulation to form. And usually the manipulation that forms 930's wick will happen in the first 30 minutes, usually. And that's ideal as well. That's the ideal situation. So 30-minute power 3s, right, used to time 930 continuations, right, time and price continuations are most likely going to happen when, I guess, like middle time frames. It's not really higher time frames, but middle time frames, at 30-minute, 1 hour kind of time frames, right? I guess your intermediate time frames are going to make this candle. That's where continuations happen, right? Because if you think about the 930 candle, right, it's just a bunch of 30-minute candles in between, right? A bunch of 30-minute candles that form it, right? So continuations, if you time it, are most likely going to happen during the open of these new candles, right? Because all we're doing is the continuation is a retracement into expansion, right? And what is a retracement into expansion? It is creating the wick of a higher time frame candle or intermediate time candle, right? So personally, I only trade from 9:30 to 11, so I only use 10 and 10:30. Sometimes you can use them with 9:30 if the initial 30-minute opening range does not form that protected higher low. That's what you see here. So the low of the 9:30 candle is formed between 10 and 10:30. So you have 9:30 opening price, 10 o'clock opening price, deep discount. Sorry. So that's basically it for 30-minute power threes. And then entry models. Entry models are very simple, just a change in state delivery, right? So these are the entry models, right? So first of all, 9:30 Judas daily power 3 continuation. So that's when we have a strong daily bias from the weekly power 3. We have a strong daily bias from midnight. So it's this, right? So we have this structure here, and I'll show you more examples on the real charts. And then 9:30 opens low, and this is where we have enough conviction and enough idea of where price is likely to go to where we can just trade the 9:30 Judas swing, right? And obviously we trade lower, gives us that change in state delivery on the 1 minute, and then we can expand higher. If you don't catch it, you can wait for 10 or 10:30 to give us that retracement that we like, right? So, and obviously inside the New York kill zone, 8:30 to 11. And this is where the second example is 30-minute regular continuations. So this is where you need this to confirm your intraday bias, right? We don't have a clear daily candle bias, right? And obviously this can actually form the low of the daily candle as well. So for example, the midnight opening price could be right here, right? And we could be, just using that 1 minute change in state, and we're cool using the 1 minute change in state because one, we have to wait until 10 to start trading if this is actually gonna be the valid low, and two, it's the higher volatility, right? So you want to be on side quicker. So limit versus market orders, this is something that you can debate on, you can use, right? For me, I use market orders. For me, since I trade lower risk to reward, the higher risk to reward, the better risk to reward of limit orders doesn't really matter to me because I'm already trading pretty low risk to reward anyways. I trade a 1.5/2. Sometimes I trade 1.5, sometimes I trade 2, depending on my risk. But obviously you gotta know the benefits of limit versus market orders. Better risk to reward, but your trade-off is you might not get filled. Market orders, you're sacrificing a bit of that risk to reward to guarantee a fill, right? So last things last, risk management, psychology, and news protocol. We'll go over news first because that's probably the biggest one. For news protocol, forexfactory.com. Also financial juice as well now for Trump speeches and like war news, right? So generally forexfactory.com, filter only red folder and gray folder. You can also do orange folder if you want. Personally, I don't really care about red folder. Red equals high impact news. Always wait for after they happen. So if there's red folder news at 10 o'clock, guess what? I'm not trading 9:30, okay? Gray means bank holidays and low probability days. For those days, I do not trade. Markets can be open or closed on those days, give or take, but all the major institutions that actually move price will not be trading on those days. So I really don't care. I'm just probably going to sleep in on those days. Also, the big three high impact news: FOMC press conference, no trading AM session prior to FOMC, non-farm payroll change, NFP, no trading the day before. So that's NFP is usually on a Friday, no trading Thursday, and then CPI, no trading prior to 8:30. So CPI doesn't really matter because obviously I started trading at 9:30. I will see how CPI affects the markets, but I'm not trading before it. And then risk management / psychology. This is probably the most important part. So risk management / psychology. My general rules, these are my general rules, is 1 win equals done, 2 losses equals done, 1 win equals / 1 loss equals done, right? So take your 1.5 R and go. That's my prop firms, right? And for more dynamic risk management and partials, it's my live. So on live, I'm taking partials. I'm okay with pyramid into my trades. But with prop firms, I don't really do that. I take my 1.5 and go, right? With prop firms, you have to be under consistency rule. So you can't have 1 to 5 RR trades. While on live, you can do that. And you have to farm winning days, right? There's minimum winning days, right? That you have to, in order to get a payout, right? 5 winning days. I'm trying to farm those winning days, right? With a 1.5 base R, all you need is above a 40% win rate. So this is for me, my worst win rates, my worst weeks are usually around a 40% win rate, maybe sometimes in the 30s, low 30s, high 30s. So worst comes to worst, I'm only a bit negative, right? Because 40% is break even with a 1.5. So it's worst comes to worst, I go break even. And this is something that you should be doing to help your psychology, right? Because you should trust your math, right? So you need to find A, what's your lowest average win rate for a week, and B, what worst of the worst pairs well with that. So if worst comes to worst, you're most likely going to be break even / small loss. That's really going to help your psychology if you trust the math, right? And it should really help, and it stops you from going break even early, stops you from sweating, the trades, right? Because you know your math, right? You know the math, you trust the math, right? And one thing I want to add is risk to reward / win percentage is not as good as capital, right? So it's a lot easier for you to get more capital than for you to improve your trading like tenfold, right? It's a lot easier to get 50K accounts with Apex or something than for you to change your entire strategy, right? Which may not be beneficial to a 70% win rate and 5 risk to reward trades, which is definitely not possible. If anyone's saying that they're averaging a 5 RR with a 70% win rate, they're most likely lying, okay? Unless they're like fucking, I don't even know, but that just should not be possible, right? So you just need more funded accounts, and yeah, that's basically it. So that's my model. I did post this in the new Gems Discord that Gaddy has. This video will also be posted in my channel. So this will be in here. You can look back over it. And now we will go into real chart examples. So let's look at this week, right? This is literally live markets, right? Well, not live markets because the markets are closed, but this is August 8th, right? This is August 7th. So this is what, August 3rd, I guess. August 3rd to August 7th price action wise. So this week, I'll go over the last, we'll go over the last 2 weeks, 3 weeks. I think we'll do 2 weeks because I don't want this video to be super long, but every single week I will be looking at, obviously you can see me looking at this stuff real time. So let's start with Monday, right? So this is one of the cases where Monday does not have to sweep out previous day low, right? Previous day low and previous day high, the sweep rule only applies to future days where the previous day is out of the week. So the earliest I can start is obviously Tuesday because the day before is obviously Monday, and that's inside the week, right? So what do we have? This is a 1 hour chart, right? This is what I said, 1 hour change in state delivery, right? We have the weekly open here, right? Weekly opening price, we have manipulation below it, right? We can manipulation below, right? We fill in the new week opening gap, not fully, which is actually a good thing if you're bullish, right? You don't want to see the full gap get filled, right? But we open low, right? So we have manipulation below, 1 hour change in state. Very easy, right? However, this is not enough for me to guarantee myself a trade, right? Because what was the rules behind it? I need a daily bias. So now I have the idea of, okay, the next couple days are most likely to be bullish, which they are, right? Wednesday was pretty bullish. Tuesday was bullish. Wednesday was kind of bullish. It was more of a smaller range day. And then the rest of the week was kind of bullish. The last 2 days were more consolidation, right? It's more chop. And I was expecting more of a counter. More on that later. But we only have one part of the model, right? We only have daily bias, right? So we have the idea that Monday, Tuesday, Wednesday, maybe Thursday, maybe Friday, right? We don't know exactly, but we have an idea that the next couple of days could be bullish, right? So what's the next plan, right? It's intraday, right? We need to know that is today going to most likely move bullish, right? And this is a little bit kind of hard on a Monday, right? Monday could, give us that CISD, right? But it might not fully expand. Today it was obviously more of an expansion Monday because this was the Monday on NFP. If you don't know, NFP Mondays always have red folder news, but most of the other times Mondays will not have news. So it could form the high or low of week, but it might not expand enough for you to trade it intraday, right? So second part of the model, what do we need? We need midnight opening price. And luckily for us, midnight opening price forms above right here, right? So this is midnight opening price. Here's midnight opening price, right? As you can see here, the low of week also forms below the midnight opening price. So that's perfectly fine, right? So this 1 hour change in state, you can use it as the confirmation for the daily power theory as well, because obviously a higher time frame power CISD is perfectly fine, right? There's also a lower time frame in here as well, but as you can see, the daily power theory or the daily candles low is also the weekly candles low so far, right? So this is one of the cases where it's nice and easy, where it's one low that forms a low of 2 candles, right? And then we expand higher, right? So this finished forming at 10 o'clock, right? So this is one of the trades I took this this week, right? So as you can see, this is the 9 o'clock candle. We open at 10, right? So 10 is that 30-minute continuation power 3. And this is also nice because 9:30 also, where is this day, by the way? I should probably bar replay this, but it's fine. Scroll all the way back, 9:30 also opens, right? This is also the 9:30 low. This is 9:30 right here. We open low, right? Change in state delivery. So we have 3 lows. We have the same low that forms the low of 3 different candles, right? So this is really high probability. We have a daily bias, we have an intraday bias, and now we have both ways that you can conclude with intraday bias, right? We have the 9:30 way, right? And then we have the daily power 3 way. So 3 candles, all pointing in the same direction. 10 o'clock opens, right? So 10 o'clock is right here. So 10 o'clock, we open low, right? We have the change in state delivery, right? You can slap on a market order here, or you can do the retest order here. And personally, this week I was going for more of a 2R kind of system. So stop below the lows. 2R is right here. Yep, as you can see here, very quick 2R. And if you wanted to hold this, you could. This was like crazy amounts of, like, at most you drop like 6R, but obviously it was, you know, more of a you know, large expansion day. Tuesday is the same thing, right? We have the idea that now we are going to expand on Tuesday, right? Tuesday should be bullish, so now we just have to confirm intraday that that's going to happen, right? Midnight opening price is right here. So here's midnight opening price. We do get the change in state delivery, right? We open low, and then we have this change in state delivery. It's kind of messy, but as you can see, the rest of the day expands away from this low, so we don't expect price to come back here. 9:30 right here, right? So right now we have enough conviction for us to trade 9:30. This is not it. I have to scroll all the way back. Oh my gosh, I should probably just bar replay this, but it's whatever, because I want to show you more of the other side. So here's 9:30, right? 9:30 opens high, right? Opens low, creates that wick, right? Closes above the changes of state of delivery. Now, this is one of the things where you have to be a little discretionary. I did not take this trade because obviously this is like a 100-point stop loss, and if I'm going for 2R, I need 200 points. So I was like, I'm not going to take the stop loss, right? This could be, you know, a good eval trade, but personally, I was not feeling it. I did not like the risk to reward. So what happens then? 10 a.m. continuation, right? So 10 a.m. opens, creates this one small opposing candle, right? Stop on a market order, right? Stop loss at the lows, and you can see this hits 2R. I actually got filled like right here. I think I got a slightly better fill. I think I got filled like right at the bottom, but 2R is like right here. Yeah, I get like, so I basically top ticked this, but obviously it's just a small retracement to eventually hit it. But that's Tuesday, right? Very simple. Now Wednesday is the first day where my bias starts to waver. I took 2 losses on this day. I'm not gonna show them to you, because I want to get into the counter, the opposing side of the market that I was talking about. So we talked about counter trend ideas, right? So when Wednesday forms this change in state delivery and we kind of see expansion lower, I'm like, this could be, you know, us making the high of the weekly candle, which we do, right? Which we do. So I was like, okay. So I took 2 losses here, had 2 winning trades here. So I was like, okay, this is probably not. This could be the high of the week, right? We have a large expansion, right? We had a large amount of expansion. NFP could, you know, retrace us back inside the range, right? We had a large move, right? In 2 days, we had over a 1,700 point move in 2 days. This could be, you know, a counter trend opportunity, right? Price expanded a lot. We're likely to recorrect, right? So I was like, okay, maybe the rest of the week will be a retracement, right? So Thursday, no trades, right? Thursday was the day before NFP. This was NFP week. So Thursday is automatically done for. We're not trading this. There was, I don't think there was many short opportunities in here either, other than lunch. Lunch had some nice shorts. Kind of studying this. I mean, you probably couldn't take a loss here at 10 o'clock, but as you can see, rest of the day was pretty bullish. For initial day, it was pretty bullish, right? But then we started having that sell-off towards lunch, and then we have chop rest of the PM session, right? So I was like, I don't trade. I'm not going to trade that. And then Friday was obviously an FP day, so obviously we're waiting after 8:30 prints, and this is where I took 1 loss. It was actually it was a winning trade, but I made it into a losing trade. So I should have taken 1.5, I feel like, on this day. 1.5 does hit, I think. Oh, wait, what? By a tick? Are we serious? I mean, you could put it like slightly below, but obviously this trade should have been a 1.5 risk to reward trade. I mean, you can put it below this, the bodies, of course, but this is one of the cases where the day kind of chopped, right? The day overall kind of chopped. I mean, there were some longs here that you can take in. Obviously, the last 2 days before an FP were not the best. So overall, this week was just a 1 hour week for me. So let's go back to this week. So we can go back to the week before that. So Monday, right? Monday, very strong, right? Low, right? CISD here. And as you can see, we expand a lot lower, right? As you can see, we expand a lot lower on 9, right? This is also above the midnight opening price as well. So this weekly high is formed above the midnight opening price as well. So this is the daily and weekly power of 3. So now we know that intraday will most likely move lower, and overall on the week we're likely to move lower. As you can see, we do see that there. So, and then I don't remember exactly if I took anything. I think I remember this week decently well enough to remember what trades I took. So, of course, this is 10 a.m., right? 10 a.m. is... No, it's 9:30. I think we have to wait for 10, if I remember correctly. Here's 10 a.m. You open here, and then obviously you slap on a short here. Right? And as you can see, this hits 2R. This goes all the way up to like 7R, right? I'm not really going to focus too much on entries because entries are simple. I'm going to kind of go over the framework of everything. So next week, next day, right? Obviously, we're going in with the bearish bias. Now, this is where Tuesday could have been a low, right? Tuesday is a high probability day for us to put in a low. Obviously, this day kind of just chops, right, afterwards. And this is where we have that invalidation, right? Obviously, we should not come back below this low, right? This low should not be touched if we're going to be bullish, right? If we're going to be bullish, this low should not be touched. As you can see, we do hit it here. And this is where I believe the daily power 3 kind of saves you here. So midnight opening price, this is the change in state delivery. There's a lot of stuff to go over, but midnight opening price, right? We have that change in state delivery up here, right? Not as pretty, but we also have that invalidation at this low. See, that invalidation gets taken at 10:15. So I think there might have been a loss. I don't remember exactly this week. Exactly. But yeah, I think there was a 9:30 loss in here, I think, that I took. But overall, you can kind of see when these invalidations gets tagged, you know that this price, now we're wrong, right? We're on the wrong side of price, right? And at this point, really not that much opportunity for me to come into the markets. Ideally, if you're short, you're up here. So obviously, that's not the best day, right? We kind of chop, right? And then we kind of expand higher. So yeah, so obviously you have to look at every single day, is price willing to respect your decision, right? Or is it not, right? So obviously we take out that low, right? Now, take out that low right now, but we do get that new change in state delivery here. This was FOMC day, so I didn't trade this day. Oh yeah, this was FOMC. I didn't trade this day. I didn't trade this day, so this day was chop, right? FOMC expanded higher. We have that low as our validation, gets hit, right? But now we have a new change in state delivery here. So this is one of the cases where the low of the week, the change in state delivery can go into next week, but you still need that idea of where price is going to expand to intraday with the daily power 3. So you can see here, daily power 3 pretty clear. You can use that 1 hour change in state. We expand higher, right? And then I think 9 o'clock and 10 expand higher, right? And then obviously Friday, similar idea, right? Not that much manipulation. I don't remember there was manipulation below midnight opening price, but we can look at that. So midnight opening price is here. We do have a little bit, so that's our manipulation. And then obviously 9:30 just straight up displaces lower. So this could have been a shift. Oh wait, no, wait. This is like a messy. I don't think I traded this day. I don't remember exactly what I did, but sweep out this high. We don't really have the closure. This is just a messy day in general. I don't think I traded this day, but the CISD is here, but we kind of take out that high. So this could be a day where you kind of get discretionary with it and go on a 30-minute. And this is where, you know, your chain of state. You could have, you know, maybe taken shorts here, but I don't think I traded this day, if I remember correctly. But yeah, that's basically it. Video's 40 minutes long already, so that's basically it. Obviously, I'll post live analysis in Gaddy's Discord, so obviously you can see this more in real time. This is just more to get y'all situation on the model. So once again, thank you guys for watching, and yeah, drop me a subscribe if you liked it. And I'll be posting daily trade recaps, right, as well, so you can also kind of see that. But yeah, other than that, I'll see you guys next time. Peace.